Hello, 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 everybody. Welcome to another edition of the Sales Development Podcast. I'm David Dulany, your host, and I'm joined today by Matt Harney, the founder of Cloud Ratings. How you doing today, Matt?
Doing well, David. Thanks for having me.
Well, thanks for coming on. I'm sure the listeners out there are with me in being a big fan of your work and what you're doing at Cloud Ratings.
Thanks.
And staying really current in this crazy turbulent market that we have right now in the SaaS and technology space. Matt, just to set the tone and the context, how did you get into um, creating Cloud Ratings, and then what kind of work are you focused on there?
Yeah, that's I came about, Cloud Ratings is an analyst firm. So we like a Gartner or Forrester, we make our share of quadrants, and then we do a lot of kind of macroeconomist style work around the entire software industry. And I came into software through an investing route. I had been an investment banking analyst in New York, worked in private equity at Ares Management, and then with a partner, started a fundless sponsor. And this was 2009. And we did not have a technology background, but we gravitated towards software due to like the recurring revenue characteristics, that there were actually interesting businesses of a small size that we could acquire as opposed to buying a restaurant or a landscaper. And so we just all of a sudden spent all of our time focused on software companies. And we were fortunate to buy two. And with one of them, I was able to take on more of an operational role. And this was 2010, and we were, looking at Marketo, installing exactly for sales commission. We had a board member who had been in sales at Oracle, and it was really motivational. And I just absolutely loved it. And I remember the transparency, even back then, KeyBank reports, Dave Kellogg, the Bridge Group. And, at night, I was studying on the internet, trying to figure out like, well, what exactly, because you can't just be a financial engineer. You got to understand what's happening at the business level. And I absolutely loved it. And ever since, I've been investing in the industry on the public side, private side, and have just stayed connected. And even dating back to then, I identified some gaps in the marketplace around ROI. We met with a lot of management teams when we were looking for acquisitions. And because we did not understand the technology and we were young and kind of betting our careers, we would keep coming back to the customer, right? And understanding at a really granular level, like walk me through the cost savings. I know you've said cost savings, or you've said, increase speed. Like how much faster is it? What are the cost savings? And try and build out kind of a financial model of what the customer would get. And that would help us understand retention, pricing power, and simply the product too, right? To really like what drives it? Is it, the size of your end customer's revenue base, or is it ticket volume? Like what exactly does this software do? And we also identified back then with one of our portfolio companies, right? In a fleet management regulatory solution, they could not call up Forrester and commission an ROI report. Simply impossible, right? In this fringe sector, barely understood, irrelevant to Forrester. But our sales team needed it, right? Because it was kind of odd solution, and fleet management kind of sat on the fringes of these companies, viewed as a cost center. Kind of the end buyer really didn't have the capabilities or political skill to navigate getting budget for a tool that saved them an incredible amount of time. But once we put that together, right, it really unlocked a lot of sales opportunities. And so I've always had that in mind. And we sold both companies, and I've been able to do some fun things, but wanted to like get back in the industry in a way that made sense for me. And felt like an analyst firm, whether through these ROI reports or through the way we approach quadrants. Today, we cover about 22 segments, largely in sales and marketing, some office of the CFO, and we're expanding, where we merge publicly available data, right? Because one thing, as this industry has matured and evolved, now there's an overwhelming array of options to consume when you're at the beginning of your buying journey. And that's where our quadrants focus is synthesizing the public information with private information, because These review sites are great. In fact, G2 is a partner of ours, but they don't fully incorporate, and other ones don't incorporate whatsoever, private statistics around revenue. And then since we are a true analyst firm, right, we're making these by hand. We go through a request for information process that's very traditional in the analyst industry, and certain number of vendors participate and share NPS, churn, risk ratings, revenue, all of these details so we can really inform an accurate quadrant. Because there's enough corner cases where maybe an automated review grid doesn't fully capture the dynamics of an industry, right? Where certain products have much higher ACVs than others. But if you just did it based on review count, it wouldn't fully reflect who the market leaders are. And so like there's some value added there. There's some value added excluding software, right? And we look at it from a individual contributor perspective. Like let's say you're a relatively junior team member and your VP or director is like, we need webinar software. Like let's get a list going. Let's start kicking tires. If you go on to the internet, right, there's going to be a lot of things out there that kind of are webinar, but kind of aren't, right? That there'll be more virtual event product with sponsorship halls and, networking solutions that, for core marketing function probably aren't relevant. And what we help do is take, and on the internet, that type of search would probably tell you there's 75 options, right? Mm-hmm. Our quadrant narrows it down to 15 human curated. We've been on the websites. We've really looked at the feature set and excluded what needed to be excluded. Mm-hmm. And on the other side of the quadrant, we're more inclusive than a Gartner, Forrester, IDC type, right? Who their client base at heart are, Fortune 500 type companies, right? Who have really, really stringent risk requirements. And yes, realistically, a seed or Series A stage company probably shouldn't be working with Pepsi. But for 95% of buyers, right, who are like, this is a best of breed, it's emerging. Do I care if it only has 1 million of ARR? No, that's a huge percentage. And we have that, and certain times they'll be designated as a notable vendor or the like. But I like to think we're more inclusive on who and the categories we cover as well. Like we try and pick ones we add value. There's reasons we don't cover security or data and analytics today is we don't see a path for us to really contribute. But then there's certain areas in sales and marketing, right, that are fringe or undercovered that we can add value. So we're trying to be selective as we build out our coverage universe on the quadrant side. So we're a research analyst firm. And then probably the best way of finding me or seeing me is we publish a ton of content, right? Mm-hmm. And some of it's a bit investor oriented. We have this thing called a SaaS demand index, mm-hmm. where we track 339 companies. It's over 300,000 searches a month. And we focus on high intent searches. So think Octo pricing, DocuSign pricing, right? And so that strips out just general brand, or surprisingly, when you get in the details, there's a lot of what we call navigational searches. Like just enough people go to Google and type in DocuSign to log in, right? And that's not very helpful for what we're trying to do, which is find a forward-looking indicator about the top of the funnel. Because that person searching for Octa pricing, right, is probably at the beginning of their buying journey. And depending on the sales cycle of each, it might be 90 days or 6 months out. And looking at this as a kind of a complement to some quota attainment data you can get from RepView. And so that was the theory there. And we've kind of built upon that on the AI side of things, a newer index called the B2B AI Interest Index. And then a third area, just kind of by demand from folks, and very particular to sales, in fact, has been tracking employment trends for 3,500 US headquartered software companies. Mm-hmm. And relevant to this cast, we have deep drill downs into sales and marketing. So you can see it by every stage: seed, A, B, C, D, E. To private equity, you can see it by head count, and a number of things like that. So you can really zoom into like what stage of companies are hiring or firing in the sales function. Just we've had enough demand from kind of the investor base we work with for that type of information. So we produce a lot, weekly newsletter, podcasts, kind of like, and all of it comes back to like just my passion for this industry. And like, I simply like enjoy waking up and seeing what Insight Partners or Iconic has published and their 80-page deck, and I'll flip through it and pick out 5 highlights because I'm already reading it and I understand, networking with a lot of operators or executives, like realistically, you shouldn't be reading every email Insight Partners sends. So I try and consume the content for you and wrap it up into a newsletter.
There is. It's a curating for very busy people, and there's so much great content out there. And it's interesting because it comes down to like it always comes down to buyer journeys on both sides. So and there's kind of two that you mentioned. One is the buyer journey for people considering software, or they identify that they have a problem and they start to do Google searches and read reviews and things like that. And then on the other side, there's the investor community that might be thinking about buying one of these companies or investing in one of them. And so on those two ends, what would be like a day in the life of someone, say, they're evaluating a software category and they don't work at it's not a Fortune 500 company, it's a small company, and they're looking at things. Where would you fit in to help them in that process?
For us, we try and just be an open resource that sits there open on the internet, no different than G2 or Capterra. With our positioning we've done some refinement in the categories we do cover, right? We don't have the breadth of G2 or something where I believe they cover like 5,000 categories at this point, right? And so we only offer a certain amount of quadrants, but for the person who is looking for webinar software or account-based marketing software, what have you, like we take pride in the quality of our list. And it's a top of the funnel resource. It's one interesting thing is, when we interface with the analyst relations departments at some of the largest vendors who have that, they want to do the full bake off and 3-hour presentation and us to make a feature by feature grid of every key parameter in account-based marketing. And we take a different approach. Everything we come back to is very data oriented and has a strict methodology. And our axes, our quadrants, if that's the right way to say it, are effectively market share and customer satisfaction, right? It's not strategic vision, product roadmaps, or certain things that you see at the largest analyst firms. And again, those can make sense. If you're Pepsi and you're buying your ERP, right, and you're making this transformational investment for the next decade, right? Maybe the roadmap, and you can work with a specialized ERP analyst, right, who all they do is cover ERP. Yeah, you can probably look into, but that's actually a little arbitrary too, because if that analyst retired and then David came in, and David might have a different viewpoint, right? And we think, again, for the rest of the software industry or the rest of the buying community, there's plenty of people, and even in my small business here, market share and customer satisfaction. All right, is this a market leader? Is this an emerging company? Is this established, but satisfaction is degrading? I can look at it and kind of just get a sense what fits for us, right? Like we like to work with emerging companies. We only buy the market leader, right? Enough people can use that heuristic as they're saying, all right, here's 15 options. Here's the first 6 we're going to really look at. And then to your audience, and particularly on the sales side and on the marketing side, right? When someone's doing that journey from the very beginning, and if you went into your Google Analytics, you went into your heat maps and saw how quickly people cycle through your sites, right? Like how fast that buying journey starts, right? And that list of 15 doesn't stay 15 for long.
Yeah.
right? And so there's certain messaging things you need to focus on that we're always surprised by, right? Like let's use the webinar or virtual events thing, right? Like sometimes it makes sense to just spell out what you do as clearly as possible, right? Because connected experience, right? If someone has 5 seconds on your site and is just trying to say, all right, as we go from 15 to 5, I don't know what is connected experience. Is this conference software? Is this webinar software? What is connected experience? Right. So you like kind of some of this sophisticated positioning and, elaborate messaging, is always hard to consume in a few seconds. So
Mm.
that's just an issue we've noticed with some of the marketing sites. So at this point, I've pontificated on this very simple question for like 3 minutes here. So I'll
It
press
makes
pause.
it makes sense, and so someone could identify a problem. We need a new sales engagement platform. We're growing out of whatever, and I'm now in charge of vetting out the different solutions potentially. They come to Cloud Ratings and there's a grid that says, okay, we've done this very significant research and we've vetted it down to the top 3 or 4, and thus depending on the trust of that they have in Cloud Ratings, then they could potentially just cut 1/3 or 2/3 of their potential time and save a lot of time to just start with those top 3 or 4.
Yeah, and we think that's where we can add value. We can't speak to in every given case, because everyone has their own requirements around integrations or security, and those things are best done by that deeper into the funnel, your own buying journey. We're not there with you. We don't really intend to be. We don't work with software buyers, actually, in terms of like an advisory function that a lot of these analyst models rely upon. We've just
Okay.
kind of taken the position that that's not a good use of our skills or time, and there's no shortage of kind of technology purchasing solutions out there, and that we're kind of finding our own path more on the vendor and investor side.
Mm-hmm. Yeah, it makes sense. And so if someone came to you and they said, okay, we vetted this down to 3, but we really don't have time to make sure that it's the right use case for our particular business. Can you help us with that? Then that would you might there's lots of RevOps, consultancies and things that could help with that.
Yeah, and like let's say it's some sales engagement thing, we would point them to you, right? And in other
Oh,
cases, we would
thanks.
just say, hey, um, there's a infotech, a few kind of relatively affordable IT advisory companies we might pass you along to, but it's just not in our, and we're trying to be focused. We're still small. And can't do everything that people have asked us to do, which has been
Yeah.
good.
That's I mean, sometimes people are looking for a butter knife in the drawer, not necessarily the Swiss Army knife. I think that's like there's a lot of I need to get a job done. I need the information. Is this to your point about the website with the really aspirational, tagline, it's like I don't know what connecting the entire universe means. Next. So,
Yeah,
yeah.
yeah. And I think that's just a general lesson we've had. I think the other thing that would be relevant to marketers would be numbers and logos speak the loudest. From a non-defining what you do, it's great to define your solutions and your use cases and your personas, but also when someone's scrolling through, right, logos stand out and numbers stand out, right?
Mhm.
33% time savings is a lot better than faster.
Mhm.
Just because as you're again on this buying journey and it's the 4th site you've been on in 18 minutes, right? And you have a job other than buying software, right? It all blends together. And the same thing with case studies, right? I don't really care to read a long quote, right? Just generic, oh, we try and embrace blah, blah, blah at our company, right? Because it's just
Yeah.
a reference customer and they kind of have to let them pontificate, and it's just a wall of text. And so the more numbers and logos, right? Because how fast all of this happens, right?
Yeah.
At the beginning. Now, maybe as you're deeper into an RFP, or you're working with a sales engineer and you can really tease this out, and it's a better use of your time then. But when someone's beginning, right, and or for your SDRs, right, when someone's reading an email copy, it's the logos and the numbers that are more memorable. Like if you test it like 5 or 10 minutes later, what somebody will remember, it will be closer to the quantitative than the qualitative.
Hmm. I see that in myself. I mean, it's like the hard to say it, but the attention span is shrinking daily in the TikTok
Yeah.
world that we live in. And so, a case study, if it was just one page, PDF that had big numbers and everything was going up and to the right, I feel like that would make more of an influence on me than this, 6-page thing.
For sure.
It's interesting. And then, so on the flip side, with investors, and they're looking at your data, how would an investor use that to be able to help them to understand the market or particular sector?
Some of it's again kind of a little bit at the beginning of the buying journey, if you will, like just
Yeah.
with the way our reports are wide open. But if you want to download a hard copy of the PDF, even though they're right there on the website, we get it, and I see the autoresponder work because it's curious. I like to see more on the potential software buyer, seeing who exactly is downloading this, what titles and the like. And we have a wide range of investment firms who are, downloading our reports in volume. And I don't know if they're doing their market mapping work or what have you. And again, like being pulled in a lot of directions. We have some capability to advise an investment firm on, market map, both in our existing coverage or new coverage. We can move relatively quickly to cover a category, but for right now, like until I build out a deeper team of analysts beyond what we have, I like just being selective, like even in how we work with investment firms. It's
Mm.
trying, like the core focus right now is building out the ROI practice, um, working with vendors
Mm.
in terms of documenting the ROI of their products.
Yeah.
It's kind of like the initiative as of, what is it, late March right now is where I'm focusing my time, because we want to get that stood up and think that is like this great untapped area of the entire software universe.
Yeah. It's interesting because now the buyer journey involves so many people. I don't know if it ever was just one person, that might have been a myth, but now if you've probably seen the Gartner chart with the buyer journey as this big spaghetti ball of
Yeah.
different people and different sign-offs and things like that. So the more that the champion is armed with relevant information that's been researched by a firm like yours, it makes them, it's a better case than just sending them in by themselves to try to buy something.
And also from the vendor side, right? You don't necessarily want to be like SDR and AE time is incredibly valuable, right?
Yeah.
And like if you just look at the length of these reports, just inherently to kind of spell out, all right, this is how this is calculated. All right, what is the average ticket volume or whatever core driver of each thing? These things are long, right? And if you're, sending short email copy, or you have 15 minutes on a Zoom with the decision maker, you don't want to be like going back and forth, and they might not remember at the moment. And, maybe you're 4 months into your role as an AE and you don't have the sales engineer or what have you. Like this is nuanced and it's a little messy, and like it's much easier to have a single source of truth, right? Like that just says, buy DocuSign, get 565% back in 3 years,
Yeah.
than it is to be, okay, well, how many signatures do you guys do a year? Is legal involved, or is it anything outside of legal? And I've only been at DocuSign for 2.5 months. I don't know what my other customers are like.
Yeah.
Just have that PDF, and that that also that conversation happens, right? But these processes are spread out. People aren't only focused on whatever purchase they're doing, and so then they re-engage 10 days later, right? And they don't remember what anyone said, right? I can barely remember something from 2 days ago. But if there's all right, here's an attachment, it looks beautiful, it's in my inbox, okay, I can open it up, all right, yeah, this is got enough, some work's been done here, and we'll leverage this.
Makes perfect sense. And um, I've been hearing a lot about like buyer enablement, and there's almost a subcategory. Maybe you can cover this. Is where you share sort of a digital sales room, and everybody's in a perfect world, the champion and the vendor and the various decision makers are kind of in this centralized location, and you're actually equipping and helping the champion in there as they used to call it walking the halls. You've got something that you're trying to do, and you're walking the halls trying to get support from other people in the organization. And this ROI report could be one of the things that they use.
Yeah, we're really big fans of digital sales room. It's actually one of our quadrant areas. We're re-updating the 2024 version, so I'm not going to speak to any particular vendors, but I would say that they're a great tool. And when you kind of experience it as a buyer, actually, like just some of the demoing we were doing when setting the quadrants last year, it really feels nice. Like it's just like a nice experience, and you would like to be sold to in that way, right? And to your point around attention spans, right? Anything you can do to keep the person locked in, as opposed to jumping around. Oh, they got back into their Outlook. Oh yeah, and then they saw, but if you can keep the person in there, and then just through some customer interviews we ended up doing around that, like there's some tactics you can use. Like one really successfully kind of put a stakeholder journey, right, where they kind of got an anchor in with one contact, and it was very easy for that contact to kind of bring in other people in their organization, like who would be in charge of implementing, or who would be a kind of dotted line to the tool, if you will. But once you put their name in it and you invite them into the sales room, right, it was that they found this hack, and it worked really well to get that one anchor contact to expand their buying committee, or stakeholders who are, and just warmed up those people in a way that other vendors competing for that business, who didn't have kind of an automated tool with some of that trick built in.
Wow.
And there can be other things, right, where you have the security review documents or the implementation plan documents right in there, right? Because you don't know who exactly is always in there, or who's influencing the decision, right? And so there might be somebody, even though your point of contact hasn't expressed anything about the security documents, right, there might be a shadow person who does, and you can see some of that engagement. And everyone loves analytics these days, and so these sales rooms give you no shortage of analytics. And when we're building out an ROI for a company in that industry, one other thing is it helps you avoid the prospects who ghost, right, who seemingly have some interest but then aren't engaged in the documents. You can spend less time prioritizing them.
Yeah. How come you're not in my digital sales room? Where are you?
Yeah. Which,
Yeah, because you think once you start a deal, you put it in pipeline, and you're thinking about it every day. This is going to be a great deal for me and my company. but it could be that on the flip side, the people that you talk to never thought about you again after the first call. And that
Yeah,
happens a lot.
EBSTA, kind of like a
Yeah.
revenue intelligence, revenue forecasting platform. They just had a huge study with Pavilion, and it's like over 500 companies, and
Mm.
60% of deals end up in no decision. And that's,
Yeah.
always hard to define. I think, Forrester and Gartner have looked at in the past, and it used to be, in the 40 to 50% range. And to
Mm.
me, that shows there's a lot of, tire kickers, right? Or people who
Mm.
this isn't a pressing priority. And what you're having, and pipelines are strong, actually. Like pipeline is quite good in that EBSTA report. But where things are breaking down is in the actual win closed one.
Mm.
And some of that is the 60% no decision, right?
Yeah.
And what you have happening, particularly as things slow down, is you have prospects pulled into a process that maybe doesn't make sense for them, right? Or the business case really isn't there, and this is a marginal decision, but on their end, they can, you know, string you along, or you never know, hang around the hoop. And then it turns out that as you get to like later in the cycle, and interestingly, in the EBSTA data, a lot of this breaks down at the ROI and business case level, right? Like the top sellers cover ROI up front, business case, and are really good about qualifying people out.
Yeah.
And if you look at the marginal sellers, it's all at the back end where these deals break down. And,
Mm.
and to me, that can also explain why we see some of the quota patterns we do, right? Is you kind of, if you see pipelines relatively full and these things break down at the end, over the course of the forecast period, it actually seems like more people will hit quota than ultimately do, right? Because you have these drop offs. And so it's not just, sales management, CFOs keeping an army of people for no good reason. It's, recently, the pipeline has been indicating that more people will hit quota than ultimately do. And that's because deals breaking down at the end. And then it's an industry maturing, right? Like it's 20 years since Salesforce IPO'd, right? Go on any given page of G2, it's very crowded. And so you're dealing with later adopters, right? Who, for whatever reason, are more software resistant, they're more bureaucratic, or, certain types of SaaS really solve a top three priority and move a number for a buyer. And then for other people, it might be more of a marginal solution. And so a lot of categories these days are in the more mature sectors, 60 to 80% penetrated. When you look at, but that's on the mature side, but that can play into, how fast cycles move, your ability to plug in a rep and get them producing right away, right? Because that marginal buyer or the late adopter, that's a different education curve. That's a different convincing curve than someone who's just fired up and wants to buy it within 2 weeks. Like that's a much different sale.
Yep. I just came out of a 3 day backpacking trip with my kids' Boy Scout troop, and we did topographical map with a compass. And my a friend Craig Rosenberg used to run a company called Topo, and it was
Yep.
always like, okay, first we need to orient ourselves on what size company am I, what am I selling, what's my TAM, the personal information that you need to bring to it, and then you look at the overall environment of what you're mapping out and going, where do I fit in this, and how do I get from point A to point B? It seems like.
Yeah. Yeah. It's a challenge. And, I was just up at Bowery Capital, their early stage venture fund, and they invest a lot in SaaS. And some of my slides were around it's a mature growth industry, and it's
Mm.
most evident at the tip of the spear. And I like to look at it in terms of SDRs and AEs, right? SDRs, Bridge Group has some great data around number of attempts going way up, about 50% up, number of quality conversations down by 50%. So like more effort, less results. Right? And it makes sense. A lot of these like Aaron Ross, predictable revenue, like introduce me to somebody at your organization. That used to work really well, right?
Yeah.
Like people didn't get that much cold email and kind of would be, all right, let me forward this along. And somehow sales would come out of that reliably and quickly. Right now, that's long gone.
Yeah.
And there's just a lot more sophistication around just even engaging somebody. And then the other one that has been really, really topical has been quota attainment. Bridge Group showed like 51%. RepView for private SaaS companies is about 39% right now. Bravado has shown even lower numbers. And that's pretty grim, right? And that's, I think, the AEs and the revenue function kind of bear the burden a lot of a lot of the other challenges in the industry, right? Around these crowded categories or everything. Like it's really, really visible, right? And the accountability comes at the AE level in ways you just can't see on the product or marketing side. Like we're not talking about any metrics around R&D productivity or lead gen productivity compared to what you can see on a quota attainment basis.
And I know that there's no simple answer, but it almost seems like when there's sort of an overpopulation in an environment, and maybe there's too many products, there's too many salespeople, there's too much of everything coming out of the zero interest rate environment that we had in technology, and now there's almost like a die off, that's set up to happen. But I know that's really thinking generally. It's not, you could have the best company out there in the world, Mr. and Mrs. Listener, but and you don't even count as part of this. But just from a macro level, maybe it's, there's too many pigeons at the the BART station, and suddenly there's going to be this 1/3 just suddenly die off.
It's fascinating, right? Because you could look, MarTech, this is like the most prevalent case of that. And
Yeah.
Scott Brinker has been
Oh my
publishing
gosh.
the
Yeah.
logo chart. And I think there's 14,000 or so MarTech apps and a sea of logos, right? And the easy thing to think is, man, that's unsustainable. It's peaked. It's going to decline. And the interesting part in MarTech is 50% of the apps are in this long tail, right, of these small apps that sit within the stack, and it stays consistent at 50%, even through some of this cycle, right? And part of it is software companies, and this is what we gravitated to when we were investing, is the business model is so goddamn good, right? When your real gross margin, particularly, at the marginal gross margin, are in the 90% range. And, if you manage your business correctly in software and you have all this recurring revenue, it's really hard to disappear. Now, there's certain instances, right, where they're kind of taking that hyper growth, VC backed IPO or nothing. And the business model kind of requires, hey, we're going to run at negative 50% margins and shoot for the moon, and that business runs out of funding. It's hard to kind of pivot that down into like something that will persist for 10 years, but it's, the culture, the employee loss, all of that. But there's so many pockets of this industry, right, that, not everyone's on an IPO trajectory. Not everyone's about to raise a Series C from Insight Partners as this best-in-class vendor, right? But they can get by and, win their fair share, because some purchases are idiosyncratic. Sometimes sales and marketing can really do demand gen and win deals that maybe they shouldn't, but that you can persist and be in decent-ish business, and actually have some access to capital through the debt market. And so a lot of these businesses persist. That's part of the problem, right? Is these things, you don't see too many good SaaS companies or decent SaaS companies disappear. Um,
Yeah.
and they stay there. And then where this really gets difficult, though, is as people feel they've maximized their TAM, and then they go into adjacent markets. And this is very common in sales, right? Sales tech, right? Where you
Sure.
add in a conversation intelligence module and the like, and everyone's kind of encroaching on each other's ground. And you end up with all of these choices, and it can be hard for buyers where 60% end up in no decision because it's almost overwhelming. So it's a maturing industry. And I would say, like, I was up at Bowery's annual meeting and they invest in early stage companies, is there's still opportunity, right? If you come out with a fundamentally better product, better support, all of these little differences add up, and you have NPS that's 20% better than your industry,
Mm.
you're going to take share and you're going to grow nicely. And that's on top of a broadly, right? In software, we can all get caught up in this downturn and how tough things are. And in 2024, industry wide, right? So average, 19% overall growth, like not just public companies, but overall industry, 19% growth in SaaS.
Mm.
Right. And so, and if you're taking share and you're breaking through and you've identified a new way, right, you've got the next thing that Tenbound loves and thinks is the best sales engagement tool. Doesn't matter exactly what's going on. Like, that thing is going to get bought. Right.
Yeah.
It's going to print 300% year over year growth the first 2 years because, and you'll always see that in software, right? Like, because it all comes back to ROI, right? If you can make your SDRs 40% more productive, yes, you're going to swipe that credit card for $150 a seat, right?
Mhm.
Boom, boom, boom. Because it works.
Yeah. It just reminds me there's the economy and then there's my economy. So it's like, there's everything that's going on in the world and it's like, oh my God, should I even start a SaaS company at this point? Is it too late? But no, if it really solves a problem for the customer, and as you mentioned in your research, if you're getting good ROI, if you're so good that the companies can't live without you, you're going to grow and be successful. And then you add on the fuel of great marketing and sales discipline and processes. Maybe you won't be the next Salesforce, but it's going to be a successful company.
Yeah. And if you just, structure your company the right way in terms of
Yeah.
both the team and then also the funding, right? It's a
Yeah.
mature industry and you have to capitalize yourself the right way, not be overfunded, right? Really think hard about what your end goals are. And,
Yeah.
kind of with investors' background, you know, really working backwards from like what, as a founder or as a, early stage investor, like what are we playing for here? Because there's a huge difference if you're
Yeah.
trying to get on that IPO trajectory and something other than that. And the rewards outside of the IPO trajectory can be great so long as you execute in the right way, and you can't do, follow kind of the hyper growth playbook and sponsor every conference and have all of this or that, but you can create an excellent outcome. And there's no shortage of exit opportunities. Investment firms, still active looking for these SaaS companies, and there's 1,200 M&A deals in SaaS a year, right? You hear about the Splunk, Cisco's, and the like, right? And you think of the IPO, but there's just this long tail of software private equity firms, software growth equity,
Yeah.
platform companies you've never heard of who are doing add-on acquisitions, and these founders have these amazing outcomes, right? As long as they, finance themselves right and didn't overfund themselves.
Yeah. So it's not all doom and gloom out there, Matt. There's still a lot of there's still a lot of good times ahead if you do it right. And one thing that you also looked into recently was the AI TAM expansion. Sorry, And this has been top of mind for a lot of people, and on what is the use case, for AI and how it's changing. Um, you call it from frameworks to actually doing the work. What did you mean by that?
And so, if you think about traditional software, so much of it is like organizing the work and creating a structure for you to go do your work. And so for this audience, sales tools that allow you to see who is last contacted, next follow up, notes logged, everything. But the actual selling and the work itself, right, is being done by the seller, right? But Salesforce or HubSpot, researched and understood, like these are the guidelines and structure that companies can use our tool and then go do however they do selling, but we're enabling them and we've given some tools to organize the selling, right? But as AI enters the equation and AI starts taking on certain work, right, where it's actually writing the email, it might even be doing the email 100% unsupervised soon enough, right? Or other activities like that. It's taking the call notes and entering them into the CRM, right? With no human oversight or limited human oversight. That starts, that level of automation is, expanding the TAM, right? Because you're workflow by workflow taking on more of like the operational responsibility, like the day job is under an AI model increasingly being done, by a tool and outside of the human. And so that inherently opens up a lot of white space. Now there's challenges with that, right? Where you really need to understand the workflow as the software company at a fundamentally different level. Because it's one thing to be like, all right, we need to give these people the form fields and this and that and the ability to do that. And another one, when you're actually going and doing the work, when you're actually writing the emails, right, yourself, and the seller's not touching it at all, you really need to know what you're doing. And so it's a different level of product development, expertise, understanding your customer, but it also creates a lot more economic opportunity for the vendor.
Mm. And it seems like a lot of companies are looking at the SDR role and saying there's we understand this process, and there are a lot of particular areas that could be sped up or automated, and this is a good use case. And you even see companies coming out that are saying we can create an AI SDR and just do the whole thing end to end. I like they haven't quite gotten there, but it seems like that's the trend.
Yeah, it's fascinating. I'm surprised at how optimistic people are on that. Like I think for the time being, and as you look at, SDRs, AEs, tip of the spear, and increasingly you can look at SDRs as a marketing function. Like once,
Yeah.
kind of the reply rates, the open rates, everything, and how their utility in a lot of ways is creating brand awareness in their own way. And just in general, if someone's speaking for your organization, right, do you want that being done unsupervised? Like, do you want AI writing press releases for you and just hitting, business wire without anyone looking at it? Maybe not. Right. And so some of this will happen. I think you should also look at this instead of just top down. Hey, I want my SDRs to be done by AI. Is the better risk adjusted path for the time being until we have, the market leaders and everyone can just tell. Like right now, everyone knows Gong is going to do a reasonable job transcribing your calls, right? Like there's no uncertainty. Oh, I need to go check it myself and make sure Gong actually works, right? That's a solved problem. But until we have that for the SDR AI thing, and I don't think we're going to have that anywhere in the next 12 months, right? You got to look at it bottoms up, right? Workflow by workflow. And it might be you're piecing it together like this app really does write the personalized emails well enough, right? But it might not be everything. You might not want cold outbound calls done by some robotic AI voice, right? That's still done by a human. And I think a lot of these things too, in an interim level, right, is the real challenges in getting this AI to the fit and finish that last 10% that you want for external facing work, um, is that look more at AI as an enabler, right? And making that top 20% person far more productive, where they can just get that much more done in a day. And a lot of these things will just be cumulative. Like a lot of us have gotten used to Calendly or Calendly like tools, right? Like I don't know exactly how much time I was spending on calendaring in the past. I don't know, but I do know that, you know, as an individual contributor myself, like just a lot more efficient with that thing happening in the background. It's probably saved certain percent per day, and you kind of layer in lots of different Calendly like outcomes. You can have some pretty supercharged SDRs or AEs or other roles, that aren't quite, I bought the SDR in a box from some AI company. It's going to be more
Yeah.
of a gradual, and then the other learning we've had in general, and also talking with some AI founders, is there's a lot of R&D on the customer side that's different than what we've all been used to with SaaS, right? Where everything's well baked and you can, kind of read the help guides, go through whatever onboarding programs they have, but it's, kind of a fixed path to like real experimentation. And if you're not doing the experimentation, you can either give up really quick and be like, oh, this is way off the mark, or like create that 20-25% of time to be like, all right, we need to re-engineer the prompts a bit. Like for our company, in our industry, the default prompts this sales AI tool gave us for account-based research, right, are just a little off. It just turns out our end market, like that's way too enterprisey. Our customers, that we have to go play around in the back end. We have to talk to them, customer success, and try it, for 2 weeks, right? Which in the real world is a long time, right? Like you actually
Yeah.
have to do some R&D. And we just had Matt Slotnick, who's the founder of Poggio Labs. It's a sales AI tool, really oriented to the account planning. And his quote was, the real early adopters are like the top 30 type companies, like the publicly traded SaaS companies who
Yeah.
they've told him, we won the last game and now we want to go win this game. Right. And they're the ones investing the most heavily, and they're taking that R&D type approach, right? Like where they're have like an innovation budget, an understanding that this is not a plug and play, just like buying Gong 2.0 and you just install it and it works. You gotta, experiment and see how it fits in, and it's a new tool. But like, these people who are embracing it, like the returns I've heard privately have been really, really strong.
Mm-hmm. Yeah, it's interesting because now you kind of look at the way that AI is being marketed is that, hey, just give us, all of your information and all your data. We'll put it into this robot, and then they're going to be out working for you. You almost the vibe is like, I just have to do some setup, and it's similar to like a SaaS example, and then it's done, and I have this sort of robot out working for me, and it's really not the case at this point.
And then another nuance in kind of this whole like, how is AI going to change headcount and sales, marketing, all these functions, right? Is there's going to be a degree of sticker shock in what if you think you're buying an SDR that's all AI, right? You're going to have a real element of sticker shock because the compute, the inference, right? And you think about, I think Bridge Group shows SDR like 120 activities a day or something like that, right? All these LinkedIn messages, count research. And if you think about each resolution, right? Like if you have a customer service ticket that gets handled by an AI bot right now, it costs about $1 in computing and model costs and the like, right? And if you have an SDR who's cranking all day, right, and you do that over the course of a year, some of these seats are going to be 30,000, some of these are 60,000 a year,
Mm.
right? And that, if you think you're going to get an AI SDR for $600 a year, right, you might be disappointed because someone or something or somehow this work is getting done, and there are real costs because of like the computing and the level of work that goes into satisfying any query or activity, that was once done by a human, and there's a lot of judgment and memory access. But in the same way, the AI will be spinning its wheels, and somewhere at Amazon or Microsoft servers are running, and eventually that cost is going to find its way back to somebody.
The meter's running.
Yeah.
Right. Yeah, that's so true. It's like when does the it's very complicated. So when does the cost benefit analysis of using one of these cross to just I could just actually hire an SDR instead of a regular person who just graduated from college, and they can do it better and cheaper and faster than AI.
Yeah, it's long term, and just as a general framework, it's hard to compete with automation, right? The
Yeah.
24/7, and the way the costs of these things go down with time. It's hard to win. But I think sometimes it gets lost in some of these AI conversations, is people forget, like, because these are going to be a different type of tool. We're all used to Apollo cost this much, or HubSpot seats cost,
Mm.
and you kind of are range of, all right, this is, and you never really need to think about like high headline numbers. And we will start to see them for these like very encompassing tools,
Mm.
if they're getting utilized that heavily.
Yeah. And that's why the NVIDIA guy keeps showing up everywhere.
Yeah.
He's
Yeah.
suddenly like this and, he probably is a genius. I don't know, but all of a sudden he's everywhere, and he's like the rock star of 2024.
For sure. Yeah. We see them everywhere.
Matt, this is great. Thank you so much for sharing your wisdom and clarifying a lot of these very, very complex. I don't envy the buyer out there right now for trying to figure out what the best case scenario is. Investors, they have a lot of resources, but not something specific like cloud rating. So um, I appreciate you coming on and telling us about this. If folks want to get on the newsletter, especially, I was going to mention the Substack is great. I look forward to it every week or every couple of weeks. How can they follow you and make sure that they get that information?
The single best place is saasletter.com. So SAASLETTER.com is the best place to find me. And it is genuinely a newsletter and curation, very little, marketing content on our end. It's just there. It's a resource that we're just passionate about. I love writing it every week. I love tracking down all the info and making some charts and graphs appear in there.
It's amazing. That's great. Well, Matt, thank you for coming on. And I think we need to make this like a quarterly thing for the
Yeah,
latest
you can
research
you
that
can
you're
tell. I
doing.
like I like
We
you
just
give me
scratched the surface.
an
Yeah.
innocent question, and then 6 minutes later you come up for air.
There's a lot to unpack. But good. Well, we'll see you over Cloud Ratings. And thanks for coming on the show.
All right, thank you, David.